McGraw-Hill Ascent Audio presents How to Make Money in Stocks, A Winning System in Good Times and Bad, 4th edition, by William J. O'Neill. Narrated by Christopher Grove. Publisher's Note: this audiobook contains references to visuals present in the print and ebook editions of the book. Disclaimer: the work is provided as is. McGraw-Hill and its licensors make no guarantees or warranties as to the accuracy, adequacy, or completeness of, or results to be obtained from using the work, including any information that can be accessed through the work via hyperlink or otherwise, and expressly disclaim any warranty, express or implied, including but not limited to, implied warranties of merchantability or fitness for a particular purpose. McGraw-Hill and its licensors do not warrant or guarantee that the functions contained in the work will meet your requirements, or that its operation will be uninterrupted or error-free. Neither McGraw-Hill nor its licensors shall be liable to you or anyone else for any inaccuracy, error, or omission, regardless of cause, in the work or for any damages resulting therefrom. McGraw-Hill has no responsibility for the content of any information accessed through the work. Under no circumstances shall McGraw-Hill and or its licensors be liable for any indirect, incidental, special, punitive, consequential, or similar damages that result from the use of or inability to use the work, even if any of them has been advised of the possibility of such damages. This limitation of liability shall apply to any claim or cause whatsoever, whether such claim or cause arises in contract, tort, or otherwise. Part 1. A Winning System. Can Slim. Introduction. You must learn and benefit from America's 100 years of super winners. After the market debacles of 2000 and 2008, investors now realize they must take charge and learn much more about what they're doing when they save and invest their hard-earned money. However, many investors don't know where to turn, whom to trust, or what they must stop doing in order to achieve true, superior investment performance. You don't have to give your money to a Bernie Madoff, who'll take it but won't tell you exactly what he's doing with it. Instead, you need to read a few of the best investment books, attend some investment classes, or participate in an investment meetup group, so you can learn how to invest with real knowledge and confidence. At the very least, you need to learn and understand well the sound principles, proven rules, and methods that can protect and build your investment portfolio over time. Half of all Americans save and invest. Now it's time to learn to do it intelligently, with critical know-how. When I started investing, I made most of the same mistakes you've probably made. But here's what I've learned. You buy stocks when they're on the way up in price, not on the way down. And when you buy more, you do it only after the stock has risen from your purchase price, not after it has fallen below it. You buy stocks when they're nearer to their highs for the year, not when they've sunk lower and look cheap. You buy higher-priced, better-quality stocks rather than the lowest-priced stocks. You learn to always sell stocks quickly when you have a small 7 or 8% loss rather than waiting and hoping they'll come back. Many don't. You pay far less attention to a company's book value, dividends, or P/E ratio, which for the last 100 years have had little predictive value in spotting America's most successful companies, and focus instead on vital, historically proven factors, such as strong earnings and sales growth, price and volume action, and whether the company is the #1 profit leader in its field with a superior new product. You don't subscribe to a bunch of market newsletters or advisory services, and you don't let yourself be influenced by recommendations from analysts or friends who, after all, are just expressing personal opinions that can frequently be wrong and prove costly. You also must acquaint yourself with daily, weekly, and monthly price and volume charts, an invaluable tool the best professionals wouldn't do without, but amateurs tend to dismiss as irrelevant. Lastly, you must use time-tested sell rules to tell you when to sell a stock and take your worthwhile gains. Plus, you'll need buy and sell rules for when it's best to enter the general market or sell and lower your percent invested. 90% of investors have neither of these essential elements. All these wise actions are totally contrary to human nature. In reality, the stock market is human nature and crowd psychology on daily display, plus the age-old law of supply and demand at work. Because these two factors remain the same over time, it is remarkable but true that chart patterns are just the same today as they were 50 years ago or 100 years ago. Few investors know or understand this. It can be your priceless advantage. In the print and ebook versions of this fourth edition of How to Make Money in Stocks, you will find in Chapter 1 100 annotated color charts of 100 of America's greatest winning stocks, covering each decade from the 1880s to the end of 2008. From the Richmond and Danville Railroad in 1885 and Northern Pacific during the famous corner of the stock in 1901, when it raced from $115 to $700 in 1 week, to Apple and Google in our 21st century. There is an enormous amount you will learn from studying these great historical examples. You'll see chart-based patterns that are repeated year after year with huge success. There are 105 examples among the 100 stocks of classic chart bases that look like cups with handles. Some are small cups, others large, and others in between. In addition to cups with handles, we've identified 8 other distinctively different, highly successful chart-based patterns that occurred in cycle after cycle. Bethlehem Steel in 1915 is our first powerful high, tight flag example, and served as a perfect historical precedent for later high, tight flag patterns such as Syntex, Rollins, Simmons Precision, Yahoo, and Taser. All of these stocks had spellbinding price moves. Charts plus earnings will help you tell the best stocks and general markets from the weaker, riskier stocks and markets that you must avoid altogether. That's why I put all these outstanding chart examples in Chapter 1, with notes marked on each chart to help you learn a skill that could just change your whole life and let you live better and far smarter. A good clear picture is worth 1,000 words. These 100 examples are just a small sample of what you've been missing for years. We have models of more than 1,000 great stock market winners over the last 100 years. It takes only 1 or 2 to make your year or your future. But you have to get serious and work at really learning and knowing what you're doing when you invest. You can do it if you really want to, and it's important to you. You'll find this is an exciting, common-sense new way of viewing America and its stock market. From the railroad to the auto and the airplane, from the radio and TV to computers, from jet airliners to space exploration, from massive discount stores to semiconductors and the Internet. This country has shown rapid, unceasing growth. Living standards for the great majority of Americans have improved materially from 100, 50, or even 30 years ago. Yes, there will always be problems, and everyone likes to criticize. But America's innovators, entrepreneurs, and inventors have been a major driving force behind its unparalleled growth. They have created the new industries, new technologies, new products, new services, and 80% of the jobs from which we all continually benefit. Now it's up to you to learn how to intelligently take advantage of the relentless growth opportunities America's freedom makes possible, and that entrepreneurs keep presenting for you during every business cycle. In the following chapters, you will learn how to pick big winners in the stock market and nail down the gains they produce. You will also learn how to substantially reduce your mistakes and losses. Many people who dabble in stocks either have mediocre results or lose money because of their lack of knowledge. But no one has to continue to lose money. You can definitely learn to invest wisely. This book will provide you with the investment understanding, skills, and methods you need to become a more successful investor, if you're willing to work at it. I believe most people in this country and throughout the free world, whether young or old, regardless of their profession, education, background, or economic position, should learn to save and invest in common stocks. This book isn't written for the elite, but for the millions of ordinary individuals everywhere who want a chance to be better off financially. You are never too old or too young to start investing intelligently. You could start small. If you're a typical working person or a beginning investor, you should know that it doesn't take a lot of money to start. You can begin with as little as $500 to $1,000 and add to it as you earn and save more money. I began with the purchase of just 5 shares of Procter & Gamble when I was only 21 and fresh out of school. Mike Webster is one of our in-house managers who also started small. In fact, Mike sold personal belongings, including his music CD collection, to raise cash for investing. Prior to managing money for the firm, he had a gain of over 1,000% in his personal account in 1999, a very unusual year. Steve Birch, another of our in-house money managers, started managing money earlier. He took advantage of the roaring bull market of the late 1990s and protected most of his gains by going mainly to cash in the bear market. Between 1998 and 2003, he had gained over 1,300%. Both Mike and Steve have had their rough years, but they've learned from their many mistakes, which we all make, and have gone on to achieve significant performance. You live in a fantastic time of unlimited opportunity, an era of outstanding new ideas, emerging industries, and new frontiers. However, you have to listen to the rest of this book, probably 2 or 3 times, to learn how to recognize and take full advantage of these amazing new situations. Opportunities are there for everyone. You are in a continually changing and hopefully improving new America. We lead the world in high technology, the Internet, medical advancements, computer software, military capability, and innovative new entrepreneurial companies. The communist/socialist system of a centralized command economy disintegrated on the ash heap of history. It did not work. Stalin's old Soviet Union killed 20 million of its own people. Our system of freedom and opportunity serves as a model of success for most countries in the world. Today, it's not enough for you to just work and earn a salary. To do the things you want to do, go where you want to go, and have the things you want to have in your life, you must save and invest intelligently. The income from your investments and net gains you can make will, in time, let you reach your goals and provide you real security. This book can change your whole life. No one can hold you back but yourself. Think positive. Secret tip. The first step in learning how to pick big stock market winners is to examine leaders of the past, like those you're about to see, to learn all the characteristics of the most successful stocks. From these observations, you will be able to recognize the types of price and earnings patterns these stocks developed just before their spectacular price advances. Key factors you'll discover include what the quarterly earnings of these companies were at the time, what the annual earnings histories of these organizations had been in the prior 3 years, what amount of trading volume was present, what degree of relative strength there was in the prices of the stocks before their enormous success, and how many shares of common stock were outstanding in the capitalization of each company. You'll also learn many of the great winners had significant new products or new management, and many were tied to strong industry group moves caused by important changes occurring in an entire industry. It's easy to conduct this type of practical, common-sense analysis of all past successful leaders. I have already completed such a comprehensive study. In our historical analysis, we selected the greatest winning stocks in the stock market each year, in terms of percentage increases for the year, spanning the past 125 years. We call the study the Model Book of Greatest Stock Market Winners. It's been expanded recently to cover stocks dating back to the 1880s. It now analyzes more than 1,000 of the biggest winning companies in recent market history in detail. Superstocks such as Texas Instruments, whose price soared from $25 to $250 from January 1958 through May 1960. Xerox, which escalated from $160 to the equivalent of $1,340 between March 1963 and June 1966. Syntex, which leaped from $100 to $570 in only 6 months during the last half of 1963. Dome Petroleum and Prime Computer, which advanced 1,000% and 1,595% respectively in the 1978 to 1980 stock market. Limited Stores, which wildly excited lucky share owners with a 3,500% increase between 1982 and 1987. Cisco Systems, which between October 1990 and March 2000 advanced from a split-adjusted 10 cents to $82. Home Depot and Microsoft both increased more than 20 times during the 1980s and early 1990s. Home Depot was one of the all-time great performers, jumping 20-fold in less than 2 years from its initial public offering in September 1981, and then climbing another 10 times from 1988 to 1992. All of these companies offered exciting new entrepreneurial products and concepts. In total, we actually have 10 different model books that cover America's innovative and highly successful companies. Would you like to know the common characteristics and rules of success we discovered from this intensive study of all past stock market leaders? They're all covered in the next few chapters, and in a simple, easy-to-remember formula we have named CAN-SLIM. Each letter in the words CAN-SLIM, CANSLIM, stands for one of the 7 chief characteristics of these greatest winning stocks at their early developing stages, just before they made huge profits for their shareholders and our country. Companies and employees all pay taxes, as well as helping to improve our living standard. Write this formula down and repeat it several times so you won't forget it. The reason CAN-SLIM continues to work cycle after cycle, and AAII's 11-year independent study, done in real time, rated it the top investment strategy in America, is it's based 100% on realistic historical studies of how the stock market has actually worked, rather than on our personal opinion or anyone else's, including Wall Street's or academic theorists. Furthermore, human nature at work in the market simply doesn't change, so CAN-SLIM does not get outmoded as fads, fashions, and economic cycles come and go. It will beat big egos, personal opinions, and emotions every time. You can definitely learn how to pick winners in the stock market, and you can become part owner of the best companies in the world. So let's get started right now. Here's a sneak preview of CAN-SLIM. C. Current quarterly earnings and sales. The higher the better. A. Annual earnings increases. Look for significant growth. N. New products, new management, new highs. Buying at the right time. S. Supply and demand. Shares outstanding plus big volume demand. L. Leader or laggard. Which is your stock? I. Institutional sponsorship. Follow the leaders. M. Market direction. How can you learn to determine it? Please begin immediately with Chapter 1. Go for it. You can do it. Chapter 1. America's Greatest Stock-Picking Secrets. In the print and ebook versions of this latest revised edition, you'll observe 100 charts of the greatest winners from 1880 to 2009. Study them carefully. You'll discover secret insights into how these companies set the stage for their spectacular price increases. Don't worry if you're a new investor and don't understand these charts at first. After all, every successful investor was a beginner at some point, and this book will show you how to spot key buying opportunities on the charts, as well as critical signals that a stock should be sold. To succeed, you need to learn sound, historically proven buy rules plus sell rules. As you study these charts, you'll note there are specific chart patterns that are repeated over and over again, whether in 1900 or 2000. This will give you a huge advantage once you learn to, with practice, recognize these patterns that in effect tell you when a stock is under professional accumulation. It is the unique combination of your finding stocks with big increases in sales, earnings, and return on equity, plus strong chart patterns revealing institutional buying, that together will materially improve your stock selection and timing. The best professionals use charts. You too can learn this valuable skill. This book is all about how America grows, and you can too. The American dream can be yours if you have the drive and desire and make up your mind to never give up on yourself or America. Chapter 2. How to Read Charts Like a Pro and Improve Your Selection and Timing. In the world of medicine, X-rays, MRIs, and brain scans are pictures that doctors study to help them diagnose what's going on in the human body. EKGs and ultrasound waves are recorded on paper or shown on TV-like monitors to illustrate what's happening to the human heart. Similarly, maps are plotted and set to scale to help people understand exactly where they are and how to get where they want to go. And seismic data are traced on charts to help geologists study which structures or patterns seem most likely to contain oil. In almost every field, there are tools available to help people evaluate current conditions correctly and receive accurate information. The same is true in investing. Economic indicators are plotted on graphs to assist in their interpretation. A stock's price and volume history are recorded on charts to help investors determine whether the stock is strong, healthy, and under accumulation, or whether it's weak and behaving abnormally. Would you allow a doctor to open you up and perform heart surgery if he had not utilized the critical necessary tools? Of course not. That would be just plain irresponsible. However, many investors do exactly that when they buy and sell stocks without first consulting stock charts. Just as doctors would be irresponsible not to use X-rays, CAT scans, and EKGs on their patients, investors are just plain foolish if they don't learn to interpret the price and volume patterns found on stock charts. If nothing else, charts can tell you when a stock is not acting right and should be sold. Individual investors can lose a lot of money if they don't know how to recognize when a stock tops and starts into a significant correction, or if they have been depending on someone else who also doesn't know this. Chart Reading Basics. A chart records the factual price performance of a stock. Price changes are the result of daily supply and demand in the largest auction marketplace in the world. Investors who train themselves to decode price movements on charts have an enormous advantage over those who either refuse to learn, just don't know any better, or are a bit lazy. Would you fly on a plane without instruments, or take a long cross-country trip in your car without a road map? Charts are your investment roadmap. In fact, the distinguished economists Milton and Rose Friedman devoted the first 28 pages of their excellent book, Free to Choose, to the power of market facts and the unique ability of prices to provide important and accurate information to decision-makers. Chart patterns or bases are simply areas of price correction and consolidation after an earlier price advance. Most of them, 80% to 90%, are created and formed as a result of corrections in the general market. The skill you need to learn in order to analyze these bases is how to diagnose whether the price and volume movements are normal or abnormal. Do they signal strength or weakness? Major advances occur off strong, recognizable price patterns, discussed later in this chapter. Failures can always be traced to bases that are faulty or too obvious to the typical investor. Fortunes are made every year by those who take the time to learn to interpret charts properly. Professionals who don't make use of charts are confessing their ignorance of highly valuable measurement and timing mechanisms. To further emphasize this point, I have seen many high-level investment professionals ultimately lose their jobs as a result of weak performance. When this happens, their poor records are often a direct result of not knowing very much about market action and chart reading. Universities that teach finance or investment courses and dismiss charts as irrelevant or unimportant are demonstrating their complete lack of knowledge and understanding of how the market really works and how the best professionals operate. As an individual investor, you need to study and benefit from stock charts. It's not enough to buy a stock simply because it has good fundamental characteristics, like strong earnings and sales. In fact, no Investor's Business Daily reader should ever buy a stock based solely on IBD's proprietary Smart Select ratings. A stock's chart must always be checked to determine whether the stock is in a proper position to buy, or whether it is the stock of a sound, leading company, but is too far extended in price above a solid basing area and thus should temporarily be avoided. As the number of investors in the market has increased over recent years, simple price and volume charts have become more readily available. Investors' Business Daily subscribers have free access to 10,000 daily and weekly charts on the web at investors.com. Chart books and online chart services can help you follow hundreds and even thousands of stocks in a highly organized, time-saving way. Some are more advanced than others, offering both fundamental and technical data in addition to price and volume movement. Subscribe to one of the better chart services and you'll have at your fingertips valuable information that is not easily available elsewhere. History repeats itself. Learn to use historical precedents. As mentioned in the introduction, and as shown on the annotated charts of history's best winners in the print and ebook versions of this book, our system for selecting winning stocks is based on how the market actually operates, not on my or anyone else's personal opinions or academic theories. We analyzed the greatest winning stocks of the past and discovered they all had 7 common characteristics, which can be summarized in the 2 easy-to-remember words, can, slim. We also discovered there were a number of successful price patterns and consolidation structures that repeated themselves over and over again. In the stock market, history repeats itself. This is because human nature doesn't change. Neither does the law of supply and demand. Price patterns of the great stocks of the past can clearly serve as models for your future selections. There are several price patterns you'll want to look for when you're analyzing a stock for purchase. I'll also go over some signals to watch out for that indicate that a price pattern may be faulty and unsound. The most common chart pattern: cup with handle. One of the most important price patterns looks like a cup with a handle when the outline of the cup is viewed from the side. Cup patterns can last from 7 weeks to as long as 65 weeks, but most of them last for 3 to 6 months. The usual correction from the absolute peak, the top of the cup, to the low point, the bottom of the cup, of this price pattern varies from around the 12% to 15% range to upwards of 33%. A strong price pattern of any type should always have a clear and definite price uptrend prior to the beginning of its base pattern. You should look for at least a 30% increase in price in the prior uptrend, together with improving relative strength and a very substantial increase in trading volume at some points in the prior uptrend. In most, but not all cases, the bottom of the cup should be rounded and give the appearance of a U, rather than a very narrow V. This characteristic allows the stock time to proceed through a needed natural correction, with 2 or 3 final little weak spells around the lows of the cup. The U area is important because it scares out or wears out the remaining weak holders and takes other speculators' attention away from the stock. A more solid foundation of strong owners.
Sample complete. Ready to continue?